Yeah, all right, everyone. So we've welcome everyone. Yeah. So let's move further. We've now derived our major zone on our weekly and daily. This is so we are making use of ash color. So you can use any color you prefer to identify your major zone and minor zone. The one I use, yes, the one I use blue and yes, and this color. Yeah. So you can use any color to identify your major zone and your minor zone. All right. Now let's go back to GBP USD. Now GBP USD, we are now to derive our what minor zone. Have you started recording? It's on, Abi. So we want to derive our what minor zone from the current price. If you want to do your analysis, make sure you are doing it from your what from your current price. You don't need to go far. What you want, what you want to know is the what is the futuristic movement of the market, not the past data. The past data is just there for what? For backtesting and guiding your analysis. Do you get it now? Yes. So now this is 4 hour time frame, and now we want to get our minor zone. Now to get our minor zone, we need to look at what? Two major zone, 1, 2, and find the what rejection in between the zone that will make that minor zone to balance in between them. So there was someone that was pointing out where is so where is it? Now this is the two major zone. Now we want to get our minor zone. We need to look at yes, so that the next person can come and sit. Eh, all right. So come and show me where is it. So what will you now do since you've discovered it? Sit down. Mhm. So you make use of what? You make use of something that will help you to identify it as a minor zone. So I said you can't use a line. So what you need to use is a what? Is a box. Is that not so? So now you have to go and choose the exactly. Mm-hmm. Yes. Then you will now go to where you discovered it and place it there. No, you press it. You click it. No, pick it again. Yes, just click on it. Cancel. You pick it. Boom. Now once you pick it, it's going to identify that you've picked it. Then you now go to that place. So yeah, move it to that place. Then, uh-huh. Then you draw it straight into the future. You draw it straight. You draw it straight into the future. Oh yeah, hold. Wait. Remove. Pick it. Oh yeah, do it again. You have to place that line. Then draw it to the future. Is it everything you are going to draw as a zone? So reduce it. Yes. Uh-huh. Then leave it. Yes. Then you double click. You double click. Don't worry, it's fine. Now, great. Is it correct? Mhm. So then once you've drawn like then you can now carry it and balance it well. So you draw it. So this rejection here, and this rejection here, and this one here too. Do you see it now? So you can, what can you do here? Because you don't want to mix it together, you change the color. Boom. Once you press this, you can now come to this paint and change the color to red, or any color you want to. Red is okay. Boom. Then the same thing you do, setting straight into the future, 15,000 or 10,000, whatever figure. 15 is so that it can go straight, it can go farther into the future. Mm. So that the length, this length now is just to this point. But if you put 50,000 and you press OK, it will, yes. Yes. Okay. Okay, you can even extend right, extend left. It's there too. Okay, if you extend left, this you know, it's gone. Pick it back, extend right. But we've extended it already to the future. No, it's work now. Extend left, boom. See now, it's going back into the history. It's even faster, sir. No, we've already done. Okay, let me return it back. If you extend right, it's going to extend from that point at which it got to into the future. It's still the same thing. Anyhow you want to do it, anyhow you want to do it. So you press OK. Now once you've done it, now you can see that it's in between what. So now what is the next thing you do? You clone it. Once you clone it, you are going to the next two major zones to put what? Your minor zone inside. So another person should come. How did you get there? Okay. Oh yeah. No. Okay. So what will you now do? You clone it. You don't need to draw again. Mm-hmm. So you clone it. Right click. Ah, you've moved it though. Yeah. Go to undo. Go to undo. Yes. It's okay. Now just right click on it. You don't need to drag. Wait, wait. Eh? Oh, okay. So just make sure it's on it. Boom. Once it's on it, just right click. That's all. So you don't need to drag it. Oh yeah. Touch it first. Let it touch it, then right click. Exactly. Then clone. Now, so what will you do? Uh-huh. Hold now. Exactly. And place it. Uh-huh. Yeah. Perfect. Perfect. Now it touched this, it touched this, it touched this, it touched this, it touched this. This is perfectly placed. All right now. So now we are going to the next two major zone. Is that not so? We are going to the next two major zone. Yeah, yeah. So we have to draw the minor zone in between. Next person. Yes. So if you are to place a minor zone in between that two major zone, where will it be? God bless you. So what will you now do now that you've discovered it? Yeah. Is it? And now you can do that, but at the same time you have prehistorical data that can allow you So in a situation that you are unable to, in a situation you are unable to get a major zone. Yes, perfect. In a situation you're unable to get a major zone at the upper part or at the lower part. See, one three one five. Imagine, imagine after deceiving me. ah, so after deceiving me, imagine. Eh, I don't close already. No, so because I knew. Okay. ERUSD. ERUSD. It has gotten to TP1 of buying. No, I was selling good. Yes, I was. I'm out of it already. Okay, you bought it. So I'm expecting it to come down. Is this live account or demo? So why did you enter a buy? What did you see? Your hand just touched it. How your hand can't touch two? Is it yes? No, now. No. You should have waited for the market to come down to this point before you buy. Before this market gets to this place, your account don't blow. All right. All right. So before I'm expecting the market. That's why I have a buy limit. That's why. No, I said I put it on the group that we are expecting a what, a buying opportunity at what level? 33.30, 33.20. Now you went to buy at where? 33.70. Yes, yes. So it's part of it. You are learning. It's part of the learning process. Don't worry, it's fine. It's part of the learning process. Guys, let's continue. So you have to make sure that you understand, and your account is very small. You now open to 50. That's good. So you are learning now. So don't worry. Losses is also part of the game. You understand? No, it's much. Don't worry. Losses is part of the game. You understand? Even though it blows, you now know that next time, or you can take the loss, or and wait, or you can. Um, praise the Lord. Let's continue. Eh? Okay. All right. All right. All right. All right. So what will you do? Eh, is he touched this, he touched this, he touched this, he touched this, he touched this. Do you see? We went back now. So let's do it. Where is it? Setting. Extend left. You see? Extend left. You see, he touched it. Perfect. Well done. Well done. Now, this is what I'm saying. Do you see that we are unable to get anyone here? Even though we look past data, there's nothing here. So what will you do? We call it a what? There's something we call psychological zone. You already know that it is expected that it is being placed in between. Is that not so? Now what will you do? You take it, boom, come and place it. Mhm. Eh? You can do that too actually. Ah, that's a nice idea. You can clone it. You have to clone this because if you start drawing again, it will be different from and places in between. So what will you do? Yeah, let's see. Setting, extend left. Now let's see if it has respected it. Yeah. Let's see if there's panel there. Oh, but do you see? This was. Let's go to daily. Do you see this? Perfect. Don't forget, it was. Don't forget, it was a psychological zone. We do not know what has happened in history. Now, let's see prehistorical data. Do you see that psychological zone you got? It acted as a resistance here. Do you see this place too? It came down, boom, and it went up. See this place too. It acted as a support here. Let me expand this thing. Do you see it now? Do you see this guy? Do you see this place? Do you see this place? Do you see this place? Reactions there. Now see this one too. Then it acted as a neckline for this end pattern. Look at this too. It acted as a what? As a support. What year is this? Are you not seeing it? So you don't need to stress yourself going to prehistorical data. Don't worry. Whatever you do around your current price, it has reacted previously. Do you get it now? Perfect. Now, this is what perfectly placed. Now, I can also do this. Clone it and let it act as my what? Psychological zone. Making sure it's the same length of this guy. What was going on? Hey, wait, oh, something is wrong. From this point to this point. Okay. Then it has to go. Let me change the color so I can see it clearly. Now, it must move from this point to this point. It must move from this point to this point. Okay. Ah, voila. Exactly. Then the same space, which is still the same thing, right? Now, let's now check prehistorical data. Remove, where is remove? I want to remove this guy. Then extend left. Now, let's see if it has respected in time past. Hmm? Do you see this? So what will I do? God bless you. Do you see this? Do you see reaction? Do you see reaction here? Have you seen this, everyone? So this, if you should take this now and clone it, it will act as a what minor zone for this guy at this level. Now that is how to draw your what? Draw your zone. And that is how to create a what? A psychological level. Now do you now see how we were able to create a psychological zone? Because we know that the length from here to here must be the same thing for the rest. Are we following, guys? So that is how it is. Now, boom, we've gotten our zone. I can move that. Now we've gotten our major zone, we've gotten our what? Minor zone. But have good. So 4 hours or 1 hour. So we can come to 1 hour and check our minor zones. Okay, correct, correct, nice. Everything is what? Well placed. All right, let's continue. Yeah. Now that you've drawn your major zone and minor zone, welcome. Now that you've drawn your what? Major zone and minor zone, what will you now do? You now start looking out for what? Structures. Are we following? You've drawn your major zone, you've drawn your minor zone. The next thing you start looking out for is what? Structures. Then how can you first look out for structures? You come to higher time frame to know the overall sentiment. What do we mean by overall sentiment? We mean what? The overall character of the market. So you come to weekly time frame, or R, and you look at the current price. Boom. Once you look at the current price, you look at the starting point of that current price. Where is the starting point of this current price? This down here. Am I correct? Now that you've gotten the starting point of this current price to this guy, what will you now do? God bless you. We will draw a what? Trend line or channel. Okay, so we will do that. Yeah, come and do it. Are you following? You understand now? You know how to create your major zone and minor zone. Uh-huh. Yes, yeah, they did it. Yeah, like all of them. These three guys, I know them very well. They are good. Mhm. But you need to go and watch the video of Fibonacci so that you guys can Fibonacci. But we'll continue today, so you get the video. Okay, you want to use the line. I prefer you make use of channel. Exactly. So the channel will guide that movement. Yes. Yeah. Okay. You want to okay draw it as a zone. Okay. Mm-hmm. Yes. Clone. Mm-hmm. I think it's okay. It's fine. Now, guys, is it correct? It's partially correct. Okay. Why is it not correct? All right. The channel. All right. So here comes, sir. So ah your so go and watch the video. Go and watch the video, you will understand. All right. Yes. Yeah. Then click it. Now, is the channel correct? Now, from the first one and the second one, which one is perfectly placed? This part. All right, let's clap for him. Now, it touched this, and it touched this, and everything is still within the what? The octane. Now, if you do, probably the reason why you missed it was because it was it was small like this. Maybe. Okay. Now, if you place it like this, what about this? So it touched this, and it did not break it. It touched it, then to the highest point. It is very correct. Has to be it must exactly. Well done, sir. So now that you've drawn this, the next thing for you to do is what? See it as a what? As a zone. Or you can leave this because this is for you to know the overall sentiment. You are not here to make executions. So now that you've done this, what will you do? You right click, boom. Go to settings, boom. Come to visibility. Are you following? Once you come to visibility, don't forget your weekly and daily are together. Is that not so? Then you will take this out from 1 minute, 1 hour, so that you can see just that channel on weekly and daily. Then you press OK. So if you come to daily, you will see it. Now, can you see it perfectly? Touch this, touch this, touch this, touch the upper. So don't forget, your daily is to make sure that everything you've placed on your weekly is well aligned. Then when you come to this, then you can now draw it as a what? As a zone on your daily. Because if you come to your weekly, it won't show you much of it. You might be thinking from here is your zone, and it will be very, very big. So you are coming down to your what? Daily, to now see it as a what? As a zone. So for you to draw your zone on this daily, how will you do it, please? All right. So somebody should come and draw it. The zone. All right. Yeah, come and draw it. I think you is still printing. Yes. How was I able to know? How was I able to know that EU was still printing? So what? Wait. Yes, like it was still printing, like selling. Yes. How was I able? I said EU was still printing, right? I said that. So how was I able to know that EU? What did he say now? Market what? So GBP USD is what? Is correlated positively or negatively? It's negatively correlated with what? Is it negative or positive? So if we say negatively, it means that they are moving in opposite direction. Now, if it is positively, that is, they are moving in the same direction. So we have GBP USD and EUR USD. They are positively correlated. So they move in the same direction. Now, because I was seeing the last candle, selling, I knew automatically that EU2 was selling, and it happened. So if this is selling, I am very certain that DXY is buying. Now let's go to DXY and check. Do you see it? Do you see that candle? Full Maribozu, still buying. Now, do you now see how market correlation works? Are we following, please? All right, so let's go to our analysis back. Great. Now, you want to draw a zone for your channel. Or how? Yes. You want to draw a zone. Yeah, so how will you draw your zone? Eh? How will you draw your zone for this channel? You want to draw a zone for this channel. No, we have been able to get the overall sentiment on weekly time frame that this market is going up. Now, this is now daily time frame. Daily time frame is now showing us that where those support and resistance trend line is for this uptrend, you can see them as a zone. I taught you guys now. You still remember. So how will you now construct the zone now? And use your yeah. So what will you pick? Okay. No, they've done it before now. Did you still remember how to draw your zone? Do you remember? Oh yeah, you come. So you've not been practicing there. Oh yeah, right, come. So make sure that when you guys get home, you teach him properly. All right. So okay, he has picked the trend line. So how will you now place it as a zone? Uh-huh. Straight into the future. Yeah, it's fine. Uh-huh. Yeah, you drag it. Uh-huh. Do you remember now? Clone. Great. Once you clone, it gives you the same what? All right. Is it correct? Yes. Clap for him, guys. Now, what me I will do is make sure that this is looking very neat. I will make sure that this guy, this last part does not come out from here, and it is inside very well, just to make sure that it is what it is neat. You understand? It's correct though, but I will just adjust it. I think it's more outside. But we understand, Sha. Exactly. Perfect. Yes, perfect. Great. Now you are seeing this as a what? As a zone. So if any breakout happens to the upside or downside, you know that this uptrend has been compromised. Then you're looking out for another trend. Are we following, guys? Now, great. Now this is daily. We've been able to know that the overall sentiment is what? To the upside. Now, can we now see? Great. Now that you've done this, boom, you come to your 4-hour time frame. Are we following? Now, the line he did as a zone is the one that is reflecting here. So what can you do to this? No, not adjust. Though. If you adjust it, it will adjust for your daily too. For your daily, do you see? The zone he drew in his daily is showing in your 4 hours. So what are we going to do? We will hide this setting. Like you will restrict it to what? Daily and weekly. Or it can just be in daily. Boom. It has gone. This is it now. right click, settings, also in daily. Okay, good. Eh? Oh, okay. I don't use 1 minute, so there's no need. But you can take it off when you are doing your own settings. Now, overall, we see the market is what going is trending up. Now, within this uptrend, from the current price of your 4 hour, Alt R. Now, this is the current price of your 4 hour. Is that not so? This is the current price of your 4 hour. Can we see another market structure? We can see a market structure, right? Okay. So now let's see this from your daily. Hmm, market started trending from this point, and I said each of the movements is a what? Is a trend on a lower time frame, is a structure and a trend on a lower time frame. Is that not so? In such a way that this impulsive movement here is having what? A market structure on lower time frame, such that this movement retracement is having what? A market structure on a lower time frame. So if we should draw this trend from year to year, it breaks out. Do you see it now? I'm just drawing this as a counter trend line. Are you guys following? And it broke out from this counter trend line to give us another trend. This one is off. This is the new trend line. Are you seeing it? Now this market went all the way down, but at the end of the day broke it to the upside. So this particular trend is our new trend. So you take this off. Where's the trend line? From this point all the way up. Are you seeing it? Now it broke it below. So this trend is now what? Compromised. Now this is our what? This is our new trend. I said everything that happened within this uptrend is what? Is a market structure on each of these what? Movements. So this movement from year to year is an uptrend. This movement from year to year is a downtrend. And I'm using this my trend line to guide the movement of those trends in such a way that if it breaks it, it becomes invalid. The next trend comes in. If you draw this trend, it breaks it. This one becomes invalid. This is the new trend. If you draw this current one now, this is the new trend. But when it breaks it, it becomes invalid. And this particular one is the what? New trend. You see, you are not following. On a lower time frame, mhm, on a lower, this is daily time frame. On a lower time frame, are you following now? Now it has broken it now. So this guy now is what? Invalid. And this is our what? Our new trend. Are we following? And it continues like that. Now if you draw this to this, it breaks it. When it breaks it, this guy become invalid. This one become our what? Our new trend. Are we following? And everything is still within our what? Uptrend. Now from here to this point is a what? Is an uptrend. Do you understand? Once it breaks it, this uptrend becomes invalid, and this become our what? New trend. From here to here. Yeah. Now this guy has broken up. So from this starting point to this point is our what? New trend. Are we following? Now this guy is close to our what? Current price. This particular movement is close to our current price. Is that not so? So if we place the trend line from here to here and draw it straight into the future, come to your 4 hour time frame. Okay, let's come back. So we have to bring it to 4 hours. So settings, visibility, hour, then 1 to 24. That is every time frame between 1 hour to 24 hours. That line will be showing. So you press OK. Now let's come back to 4 hours. Boom. Now on 4 hours, do you see it now? We can now see the market structure of that trend. On daily, it was just green, 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 green. But on 4 hours, you can see that we have green, red, green, red, green, red. That is higher high, higher low, higher high, higher low, higher high, higher low, then higher high. Before we now have a what? A breakout. Are we following, guys? This is how you what? You follow what? If you are following this very well, you will see that what I'm explaining is typical top-down analysis. That is how I analyze the market. Oh. Are we following, guys? So what will you do here? You've identified this to this as your trend line on your daily. Then you can take this off. Then use your what? Parallel channel. Then make sure you construct it very well. From this point, where is the second rejection point? This point, and draw it straight into the future. Then you open it. Where will this one be? At this point, at this. Boom. Now when you put it here, boom, it has, this one is fake out. Do you understand now? So let's say we don't know what is happening in the future yet. This is what we have. Do you get it now? So what are we going to do here? We are going to draw a zone. Is that not so? We draw a zone. So how are we going to draw this zone? Yes. So who can do that for us? Yeah, come. Have you done it before? Okay, you've done. Yeah. All right, come, sir. So yeah, you. Yeah, come and draw a zone for us. You. Yes. Come and draw a zone for us for this channel. What is this system? Yeah, come and sit down. Draw a zone for us for this channel. Don't forget, we don't know that a breakout wants to happen. No, this is our current price. Let's say this is our current price. Do you get it now? And we want to draw a zone for this channel. So how will you draw a zone for this channel? So turn a blind eye on what has happened in the future. So you are using this, this, and this. That's all. This, and straight into the future. Now we've drawn the channel straight into the future. Now we want to draw a zone for it. So yeah, draw a zone. You are not in profit. Oh. Oh. Mm. Ah. Yeah, it's now because on 4 hour time frame. No, see this now. Boom. Rejection. Reject. Indecision. So when there's indecision, what happens? Yes, but this market came all the way down first. So when it came all the way down, it will stop some people out. No how. If his account was not strong enough, he would have been stopped out. It would not, because it continues to go down. Yes, but your account will not hold again because you open two positions. Exactly. Exactly. But now, at the end of the day, your setup was okay, but your position sizing, your entry was wrong. Exactly. All right now. So do you not see the mistake? Yeah. Exactly. Ah, my God. My God. Is it correct? Yes. Don't worry, you are correct. Yes. My God. This is it. Perfect. Now, market came into our zone and it's respecting. So you are buying within this what? Within this zone. Is that not so? Now that this one has shoot up and did it break out? No. So it came back. What will you now do? You adjust it. Once you adjust it, then you will now replace your what? your zone. So delete, delete. Now, somebody should come and replace this zone. Who will do that for us? Come. Yes. Yeah. Eh? Okay, wait. You do it. Yes. Mhm. So now that everybody is fully engaged, you should be able to do analysis on your own now. On your own now. See, to analyze the market is not more than this. So this is it. So for you to now gain mastery, you have to do it over and over again. Perfect. Then what will you do? You clone it. Just press back, undo, back. Oh yeah, clone it again. Yeah, exactly. Then you drag it to exactly. You have to make sure it's the same space like the upper part. So yes, great. Now, do we see that now? Perfectly placed. Now, once you are able to draw this, you are able to know that market is what? Trending up. And if it gets to your resistance, you are to what? Sell or wait for a breakout to know if this particular trend will be responsible for the breakout to the upside. Now, this market was came all the way down. Now, you can see that this market formed a pattern at the resistance. What pattern is this? And when the end pattern continues, it starts moving on a what? Giving us lower low, lower high, lower low, lower high, lower low, lower high, and it continues till it was responsible for this what? Breakout. Now that this movement has broken out from this uptrend, what will happen? It has become compromised. God bless you. Then what will you do? You take your Fibonacci retracement. Do you still remember? Even before you start using your Fibonacci retracement, you can be using your Fibonacci retracement within a particular what? Trend. Oh, do you still remember? Now let's do this. Where is it? Where is it? Now we are able to get this, and this. And market is going straight into the future. Now, market from here got to this point and start what? Retracing. What will you do? And wait for this retracement to get to where? But it got to what? 38 and it was close to 50 and gave a what? Chart pattern. Now come to 1 hour. So once you are unable to see a position clearly, you come down to the next time frame. Are you following? Yes, you come down to the next time frame. On 4 hour, I'm unable to see clearly that this market is supposed to be buying at this point. So I have to come down to my lower time frame to now get what? A valid, you understand, a valid confirmation. The market wants to start buying from here. Now, let's continue. Market, you want to know the retracement of this impulsive movement. Is that not so? So that this market will come down to where? 38.2, 50, 61.8, which we are looking at this what? 50 to 61.8. But that does not mean that your 38.2 is insignificant. Though. Now, what are we going to do here? We are to look out for what? Candlestick pattern that will give us a what? A validation that this market is what? Is buying up. Now look at this. Boom. Gave a what? M pattern. Now, an M pattern in an uptrend, it did not form at a what? At a resistance, but it formed at a what? At a minor zone. But what are you expecting? You are expecting a what? A breakout. Now, maybe setting style. Okay, now this is the neckline of this M pattern. Now, do we see this? It broke out, but at the same time, it went back inside. So this is entirely a what? Fake breakout. Now, which now respects this what? Movement of retracement at the 38.2 fib level, giving us a what? A chart pattern. What chart pattern is this, please? Sorry, what candlestick pattern is this? You can call this a tweezer bottom, correct? But this is a what? This is not a strong, this is not a strong tweezer bottom. This is a what? A standard. It is not arami. This is three inside up. See the candle now. First candle, second candle. This is a what? Strong bullish signal. Three inside up candlestick pattern. And what happened afterwards? It came back. It came to what? To our 0%. That is our TP level at our what? Minus zone, and it gets to what? Minus 0.27. TP2. Are we seeing it now? Are we following, guys? Now, and market is still overall in between our what? Uptrend. Do you get it now? Now, from this point to this point, this market retraces to this point to go all the way to this point. Now, it is now retracing from this point. Now that this retracement is happening here, what will you do? You take your Fibonacci to know the point at which this retracement will end from the starting point of that trend, which is here, to that retracement point, and allow this market come down to what? 50 to 61.8. Did it come down? God bless you. When it came down to this point, what do you have? A bullish momentum. What? This is a bullish pin bar, which you can call a bullish what? Hammerhead. Is that not so? Hammerhead. But you can call it a what? A bullish what? Pin bar. Now, do you see it? It went okay. It was ranging, but know that the entire movement is still in a what? God bless you. So even though it is ranging, now I'm not even seeing a chart pattern. Not even a range. I'm seeing a what? A chart pattern. What chart pattern can I see here? Who can tell me? No. 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 This is not a rising wedge. No. It's not flat. What? Look at this. Who said bullish rectangle? God bless you. This is a what? A symmetrical triangle. It's part of the what? Pattern family of triangle now. For your chart pattern, we have ascending, we have descending, and we have symmetrical. Now we can see that the movement of this market is going what? Symmetrical. From a what? From a bullish momentum. Expecting that that is why you people need to go and understand your chart patterns and your candlestick patterns very well. Do you get it now? So now that I've discovered a pattern going on here, what will I do? Take a triangle from this point to this point, making sure that they are inside the triangle. So wherever the breakout happens, it is what? It is the movement. Where will be the base of this guy? Where will be this guy, right? Then what will you do? You measure it. From the breakout, where is the breakout? Did it get to the height? Now the height got to what of that Fibonacci? Do you now see that analysis are what conforming? Are you getting it, guys? Or is it working like magic? Eh? The process is okay. Yeah. Where is WC? It's even M. Come and show me the W. Come and show me the W. I'm not seeing W. What I'm seeing is that symmetrical triangle. Okay, now if this is W, where is the neckline? This is the neckline. Now, if you call this the neckline, does this movement, it did not break out from it now. So at this point that you are even, now, in a situation, let me give you a cheat code, guys. Listen to this. Everybody look at the screen. Everybody look at the screen. Please, it is very important though. Now, look at the screen. In a situation, you are having a W pattern. Let me use this. In a situation, you are having a W pattern. Are you following? Now, it has gotten here. And you are expecting that this movement of this candle should come up to the neckline and did not, and start coming all the way down. Just know that this market is already forming a what? A shape. Because this market did not go up to form this what? W. At this point, what will you now do? You take your what? Your triangle. From this point to this point, it's what it rejected from. Boom. And you take the for the base to, from this point, connect it and make sure the two join together. Wherever the breakout happened from is will be the movement of the market. So that is, if at the end of the day this market will break out, then this W pattern will still was old. Where are you looking at for your neckline? This point. Are you following? Simple as ABC. Eh? A bullish pennant and a symmetrical triangle looks alike, so you can still call it a pennant, whatever the case. Though a pennant is not as big as this. A pennant is very small, but it moves in a symmetrical shape. All right. Any question? And wedge. Now, if you are talking about a wedge should have, a falling wedge should have this shape. Can you see the shape of the triangle? This is how a falling wedge should look like. That is, all this movement of the market, we touch this, everything, every consolidation. Now, when we say that market is inside a triangle, we are saying that market is what? Consolidating. Are we following, guys? Yes. We are saying that market is what? Consolidating. Now, market is consolidating within a what? A triangle. Which kind of triangle is this? Symmetrical triangle. Market can also consolidate in a what? It can also consolidate in a what? In a falling wedge. This is how a falling wedge should look like. In such a way that the movement of the market in between, do you see that now? Moves in between it. Expecting that it will break out at where? At the upper part. A falling wedge is expected that it breaks at the what? At the upper part. Do you get it now? But if it should break below, it is still fine. But what we are looking at for is what? Breakout, 4-hour breakout. Are you following? But traditionally, the basic breakout of a falling wedge is to the what? Upside. Are you following? So this is how a falling wedge should look like. Then a rising wedge, please follow. A rising wedge will be like this. Do you see it now? So falling wedge, rising wedge. So the movement, all of the movements within this rising wedge will be in between. In which you are expecting a breakout to the what? Are we following? Now, this is falling wedge, this is rising wedge. Now, the next one, we have a what? A symmetrical triangle. Now, this symmetrical triangle is telling you that every price movement in between, every price movement goes in between, moves in between until there's what? A breakout, either to the upside or to the downside. Are we seeing this, guys? It's a symmetrical triangle. It is a what? Symmetrical triangle. This is a falling wedge. This video is recording. Are you seeing it now? This is what? This is what? God bless you. Is it double M? Now, are we following? Now, you can now see another what? Pattern like this. Now, this is another type of triangle, but this is what? Ascending what? Ascending what? Do you see that it is different from this? This one is having what? Lower low. Sorry, it is having lower high and higher low. Your symmetrical triangle is having what? Lower high and what? Higher low. So in a situation you are having lower high and higher low, market will move in a what? In a symmetrical order. Don't forget your lower low, your lower high. Let's say this is the starting point. Market move up to this point, higher high and higher low. You are expecting the next higher high, but it did not form higher high. It now gave us to us lower high. Now we are expecting a lower low. Now it came down. Did it give us a lower low? It gave us another higher low. Now this higher low is different. This low is higher than this. This low is higher than this. I'm coming. Oh, you will understand now. Then this is what? Breakout. Do you get it now? Then this part will be referred to as what? Higher low. Yes, if the starting point is also referred to as what? Higher low, because it's um the next one is higher than the starting point, so it's still the same thing. Are we following, guys? Yes. Is it confusing? Now let's go to market structure. Now, market structure for an uptrend means that market is starting from somewhere and it forms higher high, higher low, higher high, higher low. Is that not so? Now, in a situation, market, now will you refer this is also our starting point oh. It is also what? Higher low. Is that not so? Because it's because this high, this 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 particular one is higher than this previous starting point. Is that not so? So this is higher low, this is higher low. Is that not so? But in a situation, you are expecting a structure of uptrend, but you are now seeing a structure of symmetrical. That is, you will not have a what? Higher high. What will you now start having? You now start having lower high in such a way that, now see this, market is moving up, 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 but it changed here, here, here. This is downtrend, right? Now, this is what? Starting point, lower low, lower what? High. Now, if you combine this point and this point together, you will start having a symmetrical shape. If you add the movement of this guy and the movement of this lower high, you will start having a symmetrical shape. Market will start moving in a symmetrical shape. You don't worry, you don't need to process everything. Just know that there's something they call a symmetrical what? Triangle. And market is to move in between that symmetrical triangle. Once market is moving in between that symmetrical triangle, you are expecting a breakout. Now the breakout will now tell you that market has now decided to move further from the consolidation process. Now we now have a what? Another shape like this. Now what shape is this? Now this is the psychology behind this shape. The psychology behind this shape is that market is going what? Up. But there's a resistance that is disallowing this uptrend to go up further. But when it comes down, it forms a what? God bless you. Higher low. You are expecting a new what? But the resistance here keeps restricting it to go up further, and it's to become equal high, and it comes down again to form what? Higher low again, and it goes up again, and it is still rejecting at this what? At this resistance, till it becomes a what? A consolidation process. Now the traditional breakout of this guy is to the upside. Why? Because this is the psychology behind it. Because buyers are trying to what? Push price. They are hitting the resistance. They came back. They hit it again. Come down again. So they are hitting it several times till it what? Till it break. It's just as if you are taking your hammer to hit, yes, hitting a particular place. You are hitting a particular place. Once you continue that movement, what will happen? It will break. If you use hammer on the wall, you kept what? Hitting that wall, it will break at the end of the day. That is the same. That is the same movement here. That is the psychology behind what? An ascending triangle. Do you see? It is different from a rising wedge. You can see the resistance of this rising wedge. It moves up, but the resistance of this ascending triangle, it is what? It's horizontal. Do you see it now? So ascending what? Triangle. Now, do we now know the psychology behind that shape now? Ascending triangle. Now, you have ascending triangle. Now, you have descending triangle. Descending triangle will be the opposite of this guy. So, how will it be? So, that is exactly. Are you seeing this now? Now, you are expecting that market came all the way down. The movement of the market is coming down. Then, boom. It now starts what? Consolidating within a what? A descending triangle. So what does that imply? It implies that markets keep hitting what? A support level. But that support did not break. And it did not form a what? An higher high. Do you see that now? So let's follow it. Lower low, lower high, lower low, lower high. Is that not so? You are expecting the next lower low, but you have equal. It gives you what? Lower high. It came down to this place to give you what? Another equal. You are expecting a lower low, but it did not give you. To tell you that that support is what? Strong. But sellers keep what? Pushing at that was support zone. And at the end of the day, what will happen? Do you get it now? So we now call this a what? A descending abi. So these are all the triangle we have. Now we have one again. They call it the what? The expounding triangle. Expanding triangle. Now the expanding triangle is the opposite of this what? Symmetrical triangle. So how does the expanding triangle looks like? Exactly. Are you seeing this now, guys? That is, market comes in between this what? This triangle and start forming what? Higher high and lower low. Higher high and lower low. Higher high and lower low. Till there's breakout either to the downside or to the what? Or to the upside. So this triangle is this, you will definitely see it in what? Online. All these things you are seeing is online. X expanding or expounding, whatever, is still the same meaning. Expanding or expounding triangle. Same meaning, different spelling. Do you get it now? Hey, where is it? Okay, expanding triangle. Great. Now, these are all the type of triangle you will see. And everything is still giving you what? A consolidation process. A consolidation. You will always see this when you look at your chart. No, you will definitely see it. So more practice will allow you to do what? To see these things effectively. So because I've been able to practice and know, that's how I was able to know. All right. Wherever the movement is coming. Now, listen to this. For your falling wedge, if market is coming from a bearish, boom, and it forms a falling wedge, you are expecting that the breakout comes to the upside. If it's coming on a bullish and it forms a falling wedge, you are still expecting that the market breaks out to the upside. Eh? Yes. Mm-mm. Now, the market movement can either come from up or down to now form a falling wedge. God bless you. This is it. Okay, I think you sent it. Okay, this is it. Okay, you have it on Facebook, or you just saw it on Facebook. This is it now. Now, no, that is it. It's online. So if you want to know this further, just go online and expand your knowledge more. If, yes. Eh? Just just type chart patterns. Once you type chart patterns, W pattern, M pattern, exactly. This is it. Uh-huh. All the pattern, everything is there. Now, this broadening triangle is the same thing with your what? Expanding triangle. Broadening triangle means that your triangle is expanding. Do you get it now? So it is more. There are more chart patterns. So there are so many, but I'm just telling you the ones we use with triangle. You understand? For you to have the triangle consolidation, these are the things you start seeing: falling wedge, rising wedge, symmetrical triangle, ascending triangle, descending triangle, expanding. I like the view of this guy. So, I want to save this. How will I save it? Where is it? Download. It has downloaded. So, are we following, please? All right. So, are we getting this, guys? Now, this is how you get your what? Your consolidations using a what? A triangle. Are we following? Yes. Now, I'm going to copy these things out now and send it to the general platform. So, falling wedge, rising wedge, symmetrical triangle, ascending triangle, descending triangle, expanding triangle. Now, look at this. Now that you know your shape, boom, you will start. No, once you see them, look at this. Boom. Now, see this. It is forming a what? Lower low. Abi, what am I saying? Higher low, lower high. Higher low, lower high. It continues like that, continues like that. What will you do? Take your symmetrical triangle, boom, or take your triangle and do it in the shape of a symmetry. No, symmetry. 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 I think that one is symmetry. Nah? Eh? Now you take your what? Your triangle. Do you see it? From the upper part to the lower part, and you bring it out. Once you bring it out, make sure that the support, the resistance and the support is covering the whole movement of that what? Yes. Do you see it now? Now, boom, boom. Now, where did it break out from? Upside. Then, how will you now measure the height? Now, guys, look at this. How will you measure the height of this your triangle? Now, look at this. From here to here is the base of this triangle. From here to here is the base of this triangle. From here to this point is the base of this triangle. From here to here is the base of this what? triangle. From here to here is the base of this triangle. To know the base of this triangle, I don't know. But just know that when the breakout happens, boom, from what you've constructed, it starts moving in that direction because it is expanding. Are you following, guys? It is expanding. You can't know the height at which you need to get to measure the measurement for. So the measurement of this will be from where? From this point to this point. Is that not so? Then you will take it from the breakout to know the height at which it's going to get to. Then from this point, for your rising wedge to this point, is the base of that triangle. You take it out and put it from the breakout to know the point at which it's going to get to. Then this guy too, from this point to this point is the base. Is that not so? If we break out to the upside, this is the height at which it will get to. If we break out to the downside, that is the height at which it's going to get to. Are we following, guys? Now, so for your ascending triangle, no, this is not, something is wrong with this ascending triangle. Exactly. It has to be a straight line, because if it is like, if it is like this, what's, God bless you. So it has to be a straight. Exactly. So now the height of this guy, boom, downside. Now if it break at the upside, this is the length at which it's going to go to. If it break to the downside, but traditionally it is supposed to break at the upside, abi, but if it now break at the downside, this is the height at which it will get to. Are we following? Which is still the same thing for the rest. This guy too, the same thing. Are we following, guys? So market move all the way up, boom, 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 up to this point. Give us M pattern. The M pattern, even what? Break. Can we see the break of the M pattern? So it is expected to move the same height from the what? Did they move? Are we following, guys? Now that is it. Now, what we were doing before to follow this market, this is the, do we still remember this point? Yes. To this point, yes. So now market is consolidating within a triangle, and at the end of the breakout, it got to minus 0.27 of this was Fibonacci level, conforming to analysis. Are you following? Now it went all the way up to our resistance zone. Do you see that now? All the way up to our resistance zone. When it got to our resistance zone, do you see what happened in there? It formed M pattern. When it formed M pattern, it starts going in what trend? Uptrend or downtrend? Now that it's going, God bless you. Now that it's going downtrend, what are we going to do? Fibonacci. What did you say? God bless you. You use your channel or your trend line to guide the movement of the what? Of the downtrend. That is the next thing you need to do. Once you start seeing a break, once you start seeing this structure, do you see that? Higher high, higher high, higher low. You are supposed to have the next what? Higher high. But you have what? A failed swing to give you the next higher high. What do you now have? A lower low. Now that you have a lower low, you are expecting that this market that goes up should give you a lower high, and it happened. Once it gives you a lower high, boom, what will you do? You connect this to this and draw it straight into the future. But in a situation, this guy continues and it did not give you a lower high, what will happen? It goes all the way up and the downtrend structure has become invalidated or compromised. Do you get it now? But since it gives you a lower low and it's going down, what will you do? You take your channel, connect the first one and the second one, and you will draw it straight into the future. Once you draw it straight into the future, you put the resistance. Is that not so? Abi, you put the support at where? At the base. Now, are we seeing this? Okay. Yeah, yeah, yeah. All right. So let's put it. This will be our point. This point. Because we don't know what is happening in the future yet. But what are we looking for in this trend? What are we looking at for this? Now, please, oh everyone, please. Oh, it's free. Wow. Oh, let me bring this one. I don't have another one. So that all of us. I don't understand. No, 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 it's fine. Wait, wait, can they eat it? Yes, ma'am. How to make it at the back? Very simple to make it cold water. Wait. Okay, they need to do it. It's not a big. They want to start eating it. Oh. You can't eat it now. Yes. Yeah. So you have to make it. You understand? All right. Thank you, sir. Now let's follow. Listen to this. Now that you've discovered that market is moving in a downtrend using this guy and this guy, do you see it? It was just this. All right, everybody, please, can we follow? That is, we have. So, let me know when you are ready, please. Are we ready now? So we have this. Now we just let's see. We have this, and we have just this to construct our downtrend. Is that not so? We don't know what is happening in the future. So for you to now see this downtrend, you are supposed to start buying when market what break out from this trend within the uptrend in such a way that this trend is acting as a counter trend line for your what? For your overall buy movement. So if this market was moving from here, boom, 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 and it breaks out, then you will know that that downtrend has been what? Compromised. So you are looking for what? A further buy continuity. Do you get it now? So this is where patience come in. You have to wait until there's a breakout within this uptrend to tell you that this uptrend still what? is still valid. But you can see that market is within a downtrend. So I can be taking advantage of this what? Of this sell in such a way that now that I have this, I have this, I have this, boom, market move all the way up to this point. Now I want to know the retracement point of this guy. God bless you. What will I now do? I take my Fibonacci. Will you place it from the low to the high? Oh, from the low to the high. It's from the high to the low because this is a what? It is a downtrend. It is not an uptrend. Are you guys following? Yes. Boom. Now you are expecting that this market. Let me take this off. Now, don't forget, generally, you said? Yes. Yes. That's why I expand it to this. Now, is it placed well now? Now, see, don't forget, this is where most people are caught up. You are still generally in a what? In an uptrend. And this down movement is happening within an what? Uptrend. So even inside that channel, so even though you are to enter a sell, you are calling it what? A counter trend, a counter trading. That is why I used to, if I drop a setup, I say that setup we are trading, it is a retracement. Oh. So if you are trading a retracement, you are expected not to what? Stay too long. Do you understand now? You are expected not to stay too long. Once you get what you are looking for, you get out. Because this market has not what? Has not broken out from the overall uptrend. So what happened? From this high to this low, market retraced to what? Close to 38.2 fib level. And it gives a what? It gave a what? A further what? Impulsive movement for this downtrend. Do you see this candlestick pattern? Now it gets to what? 0 and it gets to what? Minus 0.27. And I can even see a pattern here. God bless you. Who said rising wedge? God bless you. This is a what? A rising wedge. Now see this. To this point. Now I have to make sure that it fits into this other one too. Now if you are unable to construct it very well here, what will you do? Come down to lower time frame. 30 minutes. Now, do you see the rising wedge? Where did it break out? Now, did it go the same height of this guy? But at least it has to go the same height for your TP1. You say? And now, your stop loss will be above the liquidity now. I told you now, your stop loss will be... Now, come to lower time frame, 15 minutes. Now, see 15-minute time frame. This is your what? See the breakout. Do you see the breakout? See the green candle retest distribution. Now you are expecting to sell at this what? At this point. Is that not so? Your stop loss will be above. You see, market came back to it again, boom, and form another what? Another pattern. Went all the way down. Are you seeing it now? Now let me come back to 1 hour time frame. Of okay, our analysis is on what? 4 hours. Or hour. Exactly. Are you seeing this, guys? Rising wedge. Now, do you see market move from down, boom, created a rising wedge, and it continues. So market continues, consolidated. Now the consolidation is acting as a retracement for this guy, getting to 38.2 fib level from this guy to this guy before it starts selling all the way down. It gets to what, this height of this fib at what, at 0, and it continues further to minus 0.27 at the what, at the support of this channel. Let's draw our Fibonacci again so that we will see it. Minus 0.27. Is it at our support? Do you see it now? So you are expected to go out from yourself from the support. Is that not so? Because market is currently at a what? A support level. Since market is at a support level and it is still within a what? A downtrend, are you supposed to sell here or buy? You have to buy here because it has given you a confluence that market has gotten to the support of your downtrend and to the support of your uptrend, and you now have a chart pattern set. A what? A bullish pin bar. Boom. It went all the way up to the resistance of this guy. So if you enter a buy here, you take out your profits from here. From here. From that resistance, because market gets to the resistance of your downtrend. Do you see it now? I don't understand. It touched there now. Yes, now. Yes, now. You are out already. If you come to a smaller time frame, I'm very sure you will see a pattern here. Now, are we following? Now, great. Now, market starts all the way from here, boom, expecting it to break out, but it respects what, this downtrend. And I told you that if a trend is emerging from a particular trend, it can act as a what? As a breakout. Now, this structure of a downtrend acted as a breakout from this what? Overall uptrend. Do you see that now? From here, you have a what? A candlestick pattern. What candlestick pattern are you seeing here? Evening star, good. You can even call it a bearish candlestick. Abi? Yes, bearish engulfing. So this trend is still what? Holding. And what happened? Market sold all the way down to act as a what? To act as a what? A breakout from the overall uptrend. So for, do you see it now? Now, for you to know the retracement of this impulsive movement, what will you do? From the high to the low. I hope you know the one I'm targeting. Great. This low. From the high of this point to this low. Expecting that the retracement gets to what? 50%. So now, breakout, retest. Now, the retest happens to be a what? A retracement for this downtrend. Can you notice the analysis are what? Are conforming. Then when the retest happened, it got to 50 to 61.8. If you enter a sell here, you take out your profit at where? 0 or at what? Minus 0.27. And you can see that your minus 0.27 is at where? Minus zone. So at this point, what will you do? Don't forget, market came down here. What will you do? You will adjust this guy to this point. Is that not so? Are we following? Now, market got here, boom. Coming out from this entire what? Uptrend. What are we going to say about this? But don't forget, on our daily time frame, don't forget, on our daily time frame, we still have an overall. Are we following? Yes. Exactly. Now, what is the downtrend we marked at? Now, This is our what? Downtrend. Now market come down to a minor zone, boom, and it is at the what? Support of a what? Of a downtrend, boom, and it, do you see the breakout? It respected it and breakout to the upside. Can we see the breakout? When it break out to the upside, what happened? We will say this downtrend has been what? Now, this guy acted as a what? As a breakout, and it's currently what? Retracing. What will you do? Take your Fibonacci from this lowest point to the highest point to know where this retracement will get to. Now, did the retracement get to 50 and 61.8? So it continues, and it formed a what? Now, at this point, I am seeing a chart pattern here. What chart pattern is this? God bless you. I think that was what you were saying. Now, can we see? Now, once you see a symmetrical triangle coming from a preceding trend, it is expected it continues when it breaks out. If it is coming from an uptrend and it is forming a symmetrical triangle, it is expected that after the consolidation of this symmetrical triangle, it continues to go up. Are you seeing that? If it is coming from a downtrend and it is consolidating in a symmetrical triangle, it is expected that the breakout, yes. Are you following? From a downtrend, exactly. So we call this a what? A bearish symmetrical triangle because of the preceding movement. Do you get it now? But we call this a bullish symmetrical triangle because of the what? The preceding movement. Are we getting it, guys? Great. Now, can we see this pattern? What pattern is this? God bless you. When the breakout happened, did it go the same height of it? Yes. It's even caused the breakout, boom, 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 and it starts retracing. And this is even an M pattern. Boom. It break this M pattern, or you can call it what? Triple top. 1, 2, 3, triple top. And it came all the way down to the same height of this pattern, coming down to 50 to 61.8% fib level, and it what starts going all the way up. Now, when it went up, it gets to what? And what? Minus 0.27. So what will you do here? This has been what? Invalidated. Because we now have a what? A new trend. Are we following? That is how you follow price movement. Oh. That is how you effectively follow price movement. Now, this, then what will you do? You take your channel. Where's your channel? Parallel channel. From this guy to this next one, straight into the future. And will it be here? If it is here, what of the one up? So you, since it's fake out, then you now take it and cover it very well. Don't forget, your Fibonacci has given you an insight that this market is going to what? Get here. So even though you draw your boom here, do you see it? Boom, boom. So if you take your profit, you enter there, right? Are you following? And you enter there, and market move to this point, move to this point. You take out your profit here. When you take out your profit here, market still move all the way up here, and it starts what? Ranging. What chart pattern is this? So when you see this, are you supposed to still leave the resistance at this point? No. Then you put it to the what? To the higher price so that you will cover the whole price movement. Then once you do this, you can take this off now. Then you are once you get this, what are you supposed to do now? You draw a what? A zone. Is that not so? I need to make sure that it is. Is it okay now? Uh-huh. Then okay, I think it's a little. Yes, I think it's perfect now. Now you cannot pick it now and place it where? Yeah, exactly. Do you see that now? The body. This one is already touching the tip. This one should touch the body and straight into the future. Do you not see that when this market came down, boom, it gave a candlestick pattern. What candlestick pattern is this? Indecision. And currently, we have a what? We have a potential morning star. 11 minutes to go. So if this market finishes, we are expecting this market to go what? Now, are we following? Now, let's say this is where we have the market now, at this point, Abi. So this point is the 50% retracement of this guy. Okay, let us draw the zone for the up too. Boom. Perfectly placed. The same space of this is the same space for this. It, it's too big. Is it okay now? Okay. How will you use ruler? There's no way you can use ruler. So now have you gotten this now? Now don't forget we said the retracement of this guy to this guy is to this point to start the next impulsive movement. Now when you start the next impulsive movement, we saw a chart pattern to tell us that a retracement wants to happen. What will you now do? You take your Fibonacci from this point, Abi, to the highest point to know the point at which it's going to retrace to. Now, the retracement, boom, up to this what point. Now, imagine you are able to catch this. What are the confluences you've gotten? Your confluence states that market has gotten to your what? Your support channel 1. Number 2, it has gotten to your what? 50 to 61.8 fib level. 2. Number 3, it has given you a chart pattern, a candlestick pattern, which is a potential what? Morning star and a what? Indecision candle from this wholesale process. Is that not so? God bless you. So what are you expecting? What are you expecting here? Market to go all the way up to where? To where? To either the 0 and the minus 0.27 in the nearest future. In the nearest what? In the nearest future. So that is the movement of the market can be like this. Everybody see? Do you see the movement? That is how market moves, but it will not be perfect like this, but it's to show you how market moves. All right. Do we see that now? Now look at this. Your final confirmation for this particular uptrend is that it must break out from this what? Don't forget there's a what? I told you that there's for any trend that is happening, another trend is what? Now see this. Is this a trend? Yes. So what will you do? You take your counter trend line to this point straight into the future. Now, do you see this? Now, this is a what? A breakout from your counter trend line. Nothing is holding the. If this guy should end My God, if this guy should end above this counter trend line, nothing is holding this market not to go up further, because the market, this counter trend line is supposed to be responsible for a breakout from this guy. But what happened? There is a breakout to say that no, I am still what? I am still valid. The overall uptrend is still what? Is still valid. Come to 15-minute time frame for your what? For your entry. Do you see this? This bullish engulfing bar is responsible for the breakout of this what? Counter trend line. What will you now do? Long at this point to the what? To this point. Your stop loss will be where? Below the liquidity. Yeah. Now, do you see this? What is the ratio of this guy? So this is 1 risk to reward ratio. This is 3. And the one down is what? The one down is what? Now, the stop loss is 17 pips, and the one above is what? 65 pips. So that is, you are losing $17 to gain what? $36. I mean, $65 rather. Yes. Do you get it now? Which, if you are using one, probably 0.1 lot size on one lot size, you are risking $750 to earn how much? $1,916. That is if you are using a bigger lot size and you have a what? A big account. A smaller lot size. So with 0.01, you are losing what? I'm not sure 0.01 is $17 for this guy. So let's say 0.1. Yes. Eh? 0.1 will be $17. 0.01 will be 7.5. Yes. Exactly. Are we getting it now? 0.1. 0.1 will be what? $75. 0.01 will be what? $7.5. Exactly. Are you getting it now? Yes. To now gain $19. 0.01 lot size. So let's see this. See this ruler. Let's see this measurement. From here to this upper part. Boom. How many pips? 60 pips. Or let's say 65 pips. Let's say 60 pips. So 60 pips with 0.01. We are mixing this thing up. First of all, we need to know this is what? 60 pips. I think from here to here is $60. Yes. No, with 0.1, it will be more than this. But guys, no problem. Once in our next class, we will be learning how to what? See, no, now it's not possible now. Look at your risk to reward ratio. Risk to risk. This is your profit. This is your loss. So your loss is lesser than your profit. Yes, now. Do you get it now? So, but in our next class, we will learn how to calculate pips, understand how to execute our market and all that. Do you get that now? That's when we enter execution. All right. Eh? Top, yes, we will still do top down analysis. Um, wait, we don't worry. We will get it now. We have MT5. Who has MT5 on his phone? My phone don't die. Who has MT5? Uh-huh. We will get it now. We will get it now. Now, this is GBP USD. Is that also GBP? That is why I like MT5. MT5 will show you the GBP USD. Now GBP USD chart. Let's open the chart. Now, what is the entry point? 1.3 what? Let's say 1.35. 1.35 is our entry point. Just leave it like that. 1.35 is our entry point. 1.351. 1 point. This is our entry point. Don't forget, market came down to our market. Wait happen. The it's fine. It's fine. Where is it? Long from. Don't forget, market has to come in between our what 50. So from this 50 long from this. Why is it not showing? Lord of Jesus. I think it's network. Abi? It's network. Oh, no network. But do we understand now? We will continue. We will continue tomorrow. We will continue tomorrow. It's just for us to know the amount. But at least, yes, we are done. All right. Thank you, everyone.